So thank you for coming out to support Eden in this initiative, but by virtue of being here, you're also supporting the rest of the community as well. So we studied sustainable community development at Simon Fraser University. The session today will highlight examples of how local investment vehicles have successfully met community needs across the country, such as affordable housing, renewable energy, sustainable food production, locally owned small businesses, technology, and community economic development projects. He'll end today's presentation with a discussion about the Columbia Valley's interest to participate in mobilizing local capital initiative. So, without further ado, Yesh.
And thanks to the Chamber for hosting the event here. At no charge, donation. Thank you so much, Susan.
Well, a part project. We want to be successful.
Thanks everybody for coming and for my fan base here. Little guy, year and a half old on last Saturday. So happy to have him. These are on your handouts, so you can take those home and share them as you wish. I'd like to thank the funders of this initiative. We work with the province of BC, the Rural Dividend Fund, BC Rural Centre, and Kootenay Employment Services, my organization, to fund this initiative for 1 year to get 2 more of these off the ground like we did in Creston. So we have a whole bunch of local supporters. We're doing 3 initiatives, 3 presentations, Radium here in Fairmont tomorrow, and 15 more. We're doing 17 in total across the Kootenays in the next 3 weeks, so wish me luck, and not much snow on them. So I'm going to talk about 12 things. I know you're only supposed to talk about 5 or 6, but we're going to pack you full of information. And I like to give a session overview because when I'm in the audience, I like to know what's coming up next so I can get a connect to how the presentation flows. So I'm going to talk about some global trends and shifts in philosophies, in the way people are doing businesses and the way people are investing. Give you some stats. Talk about what the flight of capital is and the outcomes of it. And talk about short versus long feedback loops and what that's doing in the world today. Talk about a paradigm shift in philosophies. Define what we're going to be speaking about today, which is, there are 3 different terms. They're all similar, but they have slight differences. Responsible investment sector, the impact investment sector, and community investment sector. And then talk about the value of relocalizing money back home. We can ship all of our money away, but it's very hard to keep our money back home and invest in local projects. What kind of projects can we do? And then I'm going to go around some tools that are happening around the world to help direct the shift in capital that's taking place into triple bottom line businesses. Talk about Canadian provinces and what other jurisdictions are doing across Canada. And then talk about the context here in BC. And then talk about Creston. And then talk about the initiative that we're here to discuss today. So I'm going to try to pack that into about 45 minutes. And then open it up to question and answers for a half-hour, 45-minute discussion about what you want clarity on, and then discussions. I'm going to ask you some questions about who in this room and what kind of organizations are committed to making this happen in Invermere, Columbia Valley. So, Mark Kingwell is a philosophy professor in the University of Toronto. I like this quote: how do we create a world that we want rather than the world that just happens to us? That'll get us started. So, the term flight of capital was coined by Rankin McSween, which is, he's considered the grandfather of community investment in Canada. He's over in Nova Scotia. They started community investment in 1998, deliberately from the province. They started a program in Nova Scotia with tax credits to incentivize money to come back into their own province and recirculate rather than into the global stock markets or Ontario stock markets. So he's termed the flight of capital as money leaving your community, and with that, jobs, youth, innovation, infrastructure, colleges, training centers, those are all going to those financial centers too. So, as an example, I can take my cell phone off. A little bit of housekeeping. If you haven't turned your cell phone off already, just turn it on to do not disturb. I could log into my bank account and transfer money from my checkings into my investment portfolio right now in front of you, and then invest that through a self-directed investing app into a global stock market. So I could invest on the other side of the world in front of you right now, but it's exceedingly difficult for me to invest in a business here in Invermere because of securities laws. So there is the traditional mainstream investment brokers, banks, credit unions, investment brokers sell securities, but that goes into mutual funds, GICs, the stock markets, and it's really easy to do that. So on the right, there's some stats that I have up there. It's from the United Nations, and the projections is the world population. I don't know if you can read it, but in 2012 there were 7 billion people, and in 1950, 746 million people in the world lived in an urban center. And now in 2016, almost 4 billion people live in an urban center. That's showing you the vacuum of, we're sending our wealth away to these urban centers, but so are the populations. And that's the trend that's happening right now because of capital. We live in a monetary world. And the United Nations forecasts that in 2050 in Canada, these are Canadian cities, residents, 90% of our residents will live in an urban population by 2050 with the trends that are taking place right now. And we're going to be over 9 billion people by 2050. So some things to think about. With the flow of capital, the flight of capital is the flight of population, the flight of infrastructure. So feedback loops, I want to talk about feedback loops a bit because we're in a world that is fueled by global supply chains. 100 years ago, the feedback loops used to be really short. The local milkman, the meat, the butcher, bread maker, sure, Roy knows, still got a lot of those up in his neck of the woods, up in Invermere. But the shorter the feedback loop, the more in touch with reality we become. We're deeply connected to the consequences of our actions, whether it's positive, whether it's negative. But the longer the feedback loop, those global supply chains, the more disconnected we are from the social, environmental, and economic impacts. And that's positive as well as negative. So we're importing food and cars and clothes and energy, you name it. We're a consumer culture now, and we're connected, but we're forgetting about local systems, local food systems, local energy production, local attainable and affordable housing, things like that. So we want to talk about shortening the feedback loop with where our capital is going. We can invest all around the world, but we don't know what's happening with our money. So that's part of what community investment co-ops. So there's a paradigm shift taking place right now, and actually from Golden Presentation to today, I found another news release that's really critical. But there's a recognition that businesses need to contribute to not just financial bottom line, but a triple bottom line. So how many of you have heard of the term triple bottom line? It's where you measure your financial, your social, and your environmental returns. Those last two are a bit harder to measure, but there's a lot of platforms out there now that are helping businesses to show transparency to their investors and their customers and their consumers, how they're addressing a social issue, climate change, things like that. So these are businesses that are making a difference while they're making a profit. And what's really interesting, which I just found out today, is the demands coming from the investors, but it's the transfer of wealth to women and to millennials. That's where this next demographic of impact investing and triple bottom line investments and consumerism and fair trade and organic, that's a shift with millennials and women transferring wealth. So what I found out today was, who's heard of BlackRock investments? In a good way or a bad way, because I got a good news piece, because they were part of the 2008 financial crisis, and I'm hopeful that they're making up for it with this statement that they just released a few days ago. The CEO of BlackRock BlackRock Investment Group, that's the largest asset management firm in the world. They own and consult on close to $14 trillion, which is 5% of the global equity market. So when they say a statement, it ripples throughout the world. And just recently their CEO said, now you can come up and take a peek at it, but it's slipping further away. Workers are getting less education and job security is slipping as the global economy goes into automation. And many governments are failing to prepare for the future with retirements, with infrastructure, with automation, with worker retraining, and society is turning to businesses to answer these issues. So they're demanding companies now, public and private, to serve not only a financial purpose but a social and environmental purpose. And he addressed this letter, Dear CEO, and he put it out to the world just a few days ago. So he's basically saying, in the rest of this document, if you'd like to read it, it's up here, that if you don't have a long-term strategy for social change and environmental change at your board and your CEO level, BlackRock's going to sell your investments. So it's pretty big. So I'm going to talk about some stats on where the impact and social responsible investment markets are in Canada today. But that's just going to be catalyzed by the news release that just got published. Hi. He's attended a few of these presentations, so he'll be able to get up here probably on the 17th one on this trip and do it. Michael Schuman's an economist from Washington, D.C., and he's created a new term for sustainability, which is, I really like it. Sustainability requires that every community meet the needs of all its members, including plants and animals, present and future, without compromising the needs of other communities meeting the needs of their members, present and future. The current mainstream definition of sustainability is stopping what we're doing now and just maintaining that. But we've got a lot of repair to do as well, so pretty interesting. And keep calm, there's a paradigm shift going on the bottom right. Like that. So to define responsible impact and community investing is the next 3 slides, and just give you a little idea of what's happening in Canada. Responsible investing typically applies to a set of negative or positive screens. So it's basically a do-no-harm approach to your investment portfolio. We're not going to invest in tobacco or firearms or things like that. And right now, the responsible investment industry in Canada represents 38% of the total investment sector. So it's a huge industry in Canada. Most investment firms are doing that negative screening approach or positive screening. It's a $1.5 trillion industry in Canada right now. Hopefully it's going to double with what Larry Fink just published. And millennials are more than twice as likely as baby boomers to invest in responsible or impact investing than baby boomers. So that's the do no harm approach, which is 38% of the Canadian investment sector. Impact investing, they define it a bit differently, goes beyond the passive screen by actively seeking to invest in companies or projects that have potential to create positive economic, social, and environmental benefits. So they're actually going out to companies that can report on how are you changing a social issue, how are you addressing climate change, or helping the environment. This sector has grown 123% in the last 2 years, and increasing demand from institutions and high net worth individuals, accredited investors. So this is renewable energy, sustainable agriculture, education, microfinance, health and well-being, things like that. And then community investing, which is part of this initiative, is a subsector of impact investing, but it's keeping your money in your own community while having an impact. So it enables citizens to invest in triple bottom line businesses and projects that build local wealth, create meaningful relationships, divert money from transnational corporations, and strengthen the ecosystem for our entrepreneurs. So a big piece is localization is a reaction to globalization. It's not protectionism like Trump or Brexit where we have to keep everything here. It's saying let's take a serious look at the percentage of money that we send out of our community and keep maybe 1 to 5% of that at home. So it's more about diversifying locally than keeping everything here. We still have to be a global player, but how do we start addressing social needs, environmental needs here in the Columbia Valley with our own money that already exists in portfolios or that we keep putting into portfolios year after year around the world? That's what relocalization is about. So I like to ask in the crowd, there's never usually many hands that pop up, so I hope there's more in this ballot. What value do you receive on your investments right now? Do you know where your money is going? Or like me, it's tough because I preach this, but there's no options available to me right now. Do you get that quarterly financial statement with the bar graph that says how much you've made or lost this quarter? And you've got this portfolio, here's your total amount of investments you have, and here's how much you've gained this quarter. How many people know further than that where their money is going? What businesses, what environmental impacts or economic or social impacts you're having with your investment portfolios? Just raise your hand.
Yeah.
Good. Good. Perfect. So we're asking, is the social return on investment something that's important to you? Is a community return on investment? Is a environmental return on investment that you know important to you? Because that's what community investment funds can do, is a 1% portion of your portfolio or a 5% portion, you can see the lights on in your investment. You can go and shop at that business. You can help be ambassadors and customers of that business. That's what community investing can do, is really shorten that feedback loop that, that we have right now. So, local food systems, local procurement with goods and services, clean energy production and consumption locally, services for the aging population, affordable and attainable housing, and waste management and composting systems. These are all things that a community investment fund, when we pitch in large sums of people pitch in small amounts into an investment fund, what can we do and leverage that money here at home that's going to address some needs where we can fix those. So really quickly, I'm going to talk about, that's a shift that's happening from just a general single bottom line return. Basically, there's a term in capitalist economy where if you do something to harm the bottom line, you can be sued. If you do something to harm the bottom line as a CEO or the board of a corporation, you can be sued by your stakeholders. That's including helping the environment or contributing socially to a cause. If it affects the bottom line in a negative way, to dividends to the shareholders, you can be sued. So it's pretty interesting that there's this big shift towards impact investing. And these are some different models, you might know of them, that are helping investors navigate that shift. People that want to see more value out of their investment than just a financial return. How many of you have heard about Certified B Corporation before? Are you yet?
No. Well,
There's different.
We could be, but we're focused on other things.
Yeah.
Because of time.
Yeah. Yeah. So this is a third-party certification. It's global. They're based out of, I think, San Francisco, and it's a charity. And they've certified over 2,000 corporations around the world. You have to go through a very serious screening process, and if you come out the other side with a positive social or environmental purpose, long-term strategies, you get this B Corporation certification. And let me tell you, those businesses post it everywhere, their websites, their marketing materials, everywhere they can, because it's helping investors that want to make a difference locate those businesses that are B Corporation certified, and they're finding they can't get enough. They're getting more money than they can accept. Accredited investors, financial institutions, and asset management companies are looking for B corporations. So there's 2,000 corporations in over 50 countries that are certified right now, and that's just popped up in not even 10 years ago, I think. RSF Social Finance is out of California as well, and they started in California and now they're in all 50 states. And it just came into Canada recently in the last year or two. And they they do really alternative financing, but they connect lenders and investors peer-to-peer. Whether you want to lend money or whether you're an accredited investor that's looking to make social change. And their mandate is to alleviate poverty through local investment. And they've lent out over $100 million, invested over $100 million, and granted out through their charitable organization over $50 million. And now they've branched into Canada, so if anybody's looking for financing from an organization like that, you don't just get financing, you get support as well. Kiva.org, how many people have heard of that? It's a pretty popular platform. So you've heard of microlending. This was the first microlending organization to pop up on the internet. I think around 2005 is when they started, when people felt a little bit safer sending money over the internet and it wasn't so scary. And now they're in over 80 countries. And basically you can lend as little as $25 to somebody in any country around the world that's an entrepreneur that wants to take a loan out and repay that. So you're buying seed for some people, you're buying cattle, you're buying equipment sometimes. And it starts at $25, and when that loan's repaid, you can either withdraw it or you can recirculate it in Kiva, which is pretty interesting. And then the last one, which I like, is the Plunkett Foundation is a community foundation out of the United Kingdom, and there's 26 pubs closing every week in the United Kingdom right now. And they're addressing this issue by taking the cooperative model approach, which is similar to the investment co-op, and where a community is losing their pub as a central place to gather and socialize, the community is buying it as a cooperative association, owning it together. So it's a one member, one vote. It doesn't matter how many investment shares or membership shares you own, everybody has one vote. Doesn't matter how much you drink there, you still only have one vote. And now there's 56 locally owned, community owned cooperative pubs in the UK as a pushback to large conglomerate pubs coming into towns or cities and taking some of that local business away. So it's pretty interesting to see some of these models pop up. So what they did was create a program called CEDIF, the Community Economic Development Investment Funds. And that's to repatriate money, whether it's in your existing portfolios or new money, RRSP, tax-free savings account, and they would give you a 35% tax credit on your investment if you held it in for 5 years. And then if you held it in another 5 years, they'd give you another 20% tax credit, provincial tax credit. And if you held it in 15 years, they'd give you another 10%. So 65% of your investment was guaranteed principal by the government, and still is. They've done over $70 million. They've repatriated over $70 million now. So 65% of your principal is guaranteed if you hold it in for 15 years. Slow, patient capital in your economy. And that's not including if it was an RRSP eligible investment, you get another 20 or 30% tax return for contributing new money into your RRSP, and not including any of the returns the businesses were giving you in dividends. So pretty much 100% of your principal was guaranteed if you held it in for 15 years, with tax credits and RRSP credits. And then they really stimulated the rest of Canada to wake up to this. New Brunswick has a small business investor tax credit program. They give you 50% return on your investment with the tax credit right away. They realized that it was only between 2 or 3 years for a payback economically to the province to pay back that 50% tax credit that they gave you for the economic multiplier effect of keeping money in New Brunswick. Prince Edward Island has one called the Community Economic Development Business Program, which is 35% tax credit. Manitoba has a small business venture capital tax program, which is 45%. And Alberta just announced a 4-year pilot a year or two ago, which is called the Alberta Investor Tax Credit Program. And that's 30% tax credit. So it's happening all across Canada and BC. We've got a successful, it's called the Venture Capital Corporation Program. On one of those handouts that Terrell handed out today is the green looking one, the BC Rural Center. There's a stat on there, it's a pie chart, and that's the Venture Capital Program in British Columbia. It's a 30% tax credit. but it's only equity investing, and over 90% of the tax credits are oversubscribed in Vancouver, mainland Victoria, and the Okanagan. So rural BC, you'll see in there that the Kootenays is the lowest subscription rate to the Venture Capital Corporation program. It's costly, it's expensive, you have to report with the Venture Capital Branch. It's great when you get scalable investment funds, multi-million-dollar investment funds, but for rural community investment co-ops, that model doesn't quite work. It's too expensive to run. So when we were looking in the feasibility study in this, we looked at venture capital corporations in BC, community investment co-ops, community contributions, micro-lending, nonprofit lending organizations. We looked at them all that we could legally incorporate a community investment fund in BC, and we chose the investment co-op. So a little bit of setting here in BC. In 2013, which was the last Statistics Canada bits, was $4.7 billion were contributed in new money to British Columbians, or RSPs. And all of that money leaves your community, and most of it leaves the province, and some of it leaves the country. So if we were to take just 5% of that new money going in, that's not tax-free savings accounts, that's not existing RSPs or TFSAs, mutual funds or savings account, that's just new money leaving every year. 5% of that annual contribution is $235 million in local investments. That's what we're corresponding to the government right now is take a look at these programs from across Canada. Let's look at that 1 to 5% shift, and what does that mean? You don't have to raise taxes. You can incentivize something like this with people's money that already exists just to repatriate it back here in BC. So that's the investor side. There's a demand on the investor side. A lot of investment brokers I've talked to across the province and in the Kootenays, and a lot of investors as well. And there's a huge demand to be able to efficiently place some of your money into your own community or your own region. It's very hard to do that unless you're a wealthy accredited investor or a close family and friend of that business. And if anybody's been a business trying to raise capital, you'll know that it's very hard to raise capital in a rural area because venture capital corporations aren't out here. There's a small amount of angel investors. So you really got to lean on friends and family, and if you really want to raise some money, you have to do a $100,000 prospectus to lay out all the risks and filing everything to raise money publicly. But what we've done is created an investment co-op which can work in that existing environment without having to do all of that. So that's the investor side. The business side is, there's another demand. BC Economic Development Association has this platform called Executive Pulse, and they do business retention expansion studies. So to give you an example, in Creston we did a BRE study, business retention expansion, and interviewed 81 businesses all across the region and said, what are you doing the next 1 to 5 years? Here's 200 questions, sit down with this consultant, go. We interviewed 81 businesses. And so has Golden, and I don't know if Invermere's done that. Jerry, have you done a BRE study lately with Executive Pulse?
No, not recent.
Soon? But many communities across the Kootenays have, and that system is tied in across British Columbia. And the number one barrier to business expansion is access to finance. It comes up time and time again in these regional BRE studies. You'll also see on that sheet that Kootenays saw the largest drop in self-employment growth rate at negative 36%. From I think 2009 to 2014, there was a negative 36% drop in self-employment growth rate. And when we started lobbying for a local investment program in BC as part of this coalition, which is my next slide, we've received support from the BC Chamber, which Susan was talking about. 500 managers from around the province got together and voted yes to changing securities laws and creating tax credits in BC like the 6 other provinces. Unanimous vote across 500 people in that room on both policies. The Rural Advisory Council supports it. Union of BC Municipalities have passed 2 resolutions, this one last year and one the year before, to support a local investment program in BC. BC Community Futures Development Corporation has also provided a support letter, and and many more. BC Rural Centre, who's a co-sponsor of this initiative, did a large survey around all of rural BC, and they found that half of business owners are wanting to retire in the next 1 to 5 years, but they anticipate great difficulty in selling their business. So community investment co-ops like the Plunkett Foundation, when there's something that's leaving the community like a pub or an abattoir, or in Alberta there was a rail line getting shut down, and it was a grain community. So if CN shut that rail line down, they were toast, they were a ghost town. So the community came and bought the rail line, bought their own locomotive, and brought it to the CN main track, and kept that community alive. So it can be a key in succession financing, startup financing, or business expansion too. So, yeah. So this is the last in BC, and then we'll get to what we did in Creston. And hi. In the last 3 to 4 years, there's been 6 investment co-ops that have popped up around BC, including Creston. We were the first rural investment co-op. And as part of a learning community and an advocacy group, we created a BC Community Impact Investment Coalition, which I just stepped up as chair for. I don't know why I did that, but everything we're doing in Creston and this just streamlines right into it. So there's Vancouver Island Community Investment Co-op, is Victoria and all the Gulf Islands and Southern Islands in Vancouver. Community Investment Co-op in Creston, Transition Salt Spring, is trying to get Salt Spring Island to 100% renewable energy with their investment co-op. Galliano Community Loan Fund. Risa Capital on the Sunshine Coast created it's a business with a venture capital corporation, a community investment co-op, and a community investment corporation. They've tied them all together. And Niagara Forks Investment Co-op for Lower Mainland, Vancouver area. So most of these, actually all of these except Creston, has either been community futures or a credit union, or a partnership between community futures and credit union establishing these autonomous investment co-ops, because they realize that as financial institutions they're restricted in what they can lend to, even if they want to, and a lot of their members and clients and patrons would like to invest locally and be transparent about it. They want to know where their money is going, instead of depositing it into the bank and not knowing where it's going, or investing in global mutual funds and stocks. So community futures and credit unions have been a big part of this movement in BC. Van City started the first investment co-op about 3 years ago in Vancouver, which is called the Niagara Forks Investment Co-op, and they invest strictly in agriculture, restaurants, food production, stuff like that. So we're working with the BC government right now. We've been in and out to Victoria a few times, meeting with some of the new ministers to talk about, we've got a really detailed policy brief and a whole list of recommendations with existing securities laws and what we want changed in those to enable the local investment movement in BC, like other provinces have done. And we're making some traction. That's all I'll say right now. If you want those policy briefs, shoot me an email afterwards and I can send them to you. Get to Creston here. So I've been with Kootenay Employment Services for almost 10 years now. It's an employment, our mandate is to alleviate poverty through employment and community economic development services. So we made a shift from 100% employment. The organization's been around for about 25 years. There's over 30 full-time staff. 30 in Creston, and myself and Terrell. If you haven't met Terrell yet, Terrell's my co-worker up here in Invermere, and we're driving this investment movement in BC from Invermere. We made a shift from 100% employment about 6 years ago, resume writing and employment development services, to more of an community and economic development focus. So we started doing community conversation. We've been researching and developing these investment funds for the past 4 years and got Creston's up and running, and now we're replicating it. So we realized quickly when we went from employment to business development supports and business development programs, self-employment courses, that access to capital was pretty pretty few and far between in the Creston and district area. So we started looking at these models across Canada. Is there something we could do here? And then while we started that research, a major business, a third generation business in Creston, was really seeking some financing to expand their operations. They were a world-class juicing company, and they couldn't find the financing they needed. We were talking with community stakeholders and debating whether we started an investment co-op specifically for that. And we ended up saying, no, let's go slow, and hopefully they'll still be here when we set it up. They weren't. They relocated to Montana and created jobs in Montana where there's a more enabling environment and tax credits and support for local agriculture production. So we lost a real critical business in Creston, and that really sparked a fire under community stakeholders. So we started holding discussions like this in the community. Our first one had about 80 participants out at it, and I said, okay, you want a community finance model? Who in this room is going to step up? I'm going to ask you that exact same question at the end of tonight. And we had 20 local stakeholders out of that 80-person presentation step up. We finished up our feasibility study with them, looking at all those different models like micro-lending and investment co-op and all the other ones. Chose the investment co-op together and then did the business plan. I facilitated that discussion. And then we launched it to the public and had over 300 people attend these public sessions about this community finance model to be incorporated in Creston. One of the stipulations with securities law in BC is that you have to be a founding member, sign on the founding documents to invest in the first 12 months. Or if you become a member the day after you receive incorporation, you have to wait 12 months before you're allowed to invest in a co-op. So we're trying to change that, but we had 107 people in Creston and area, which is about 1% of our population, sign 6 founding documents and mail it all to the BC registry and backlog them for a week. And it's good MO for the discussions I'm having with ministers is, hey, look, more of these are going to pop up, and if you don't want your registry services to be backlogged, you're going to need to change that 12-month waiting period for sure, and a few other things. So we launched in Creston the investment co-op model, and before I get into the structure of Creston, to give you an example of what they're doing, I'm going to talk about why most of the investment funds in BC are co-op models. One, there's a specific security exemption for co-ops to raise capital without filing expensive audits and prospectuses and reporting to the Securities Commission, which makes it you're unable to do that in a rural community with a smaller investment portfolio. You have to get a multi-million-dollar investment portfolio before you can pay for those fees. So the investment co-op allows cooperatives, food co-ops, producer co-ops, worker co-ops, investment co-ops, to raise mountain equipment co-ops, to raise $5,000 from each member before you have to go to filing expensive securities and reporting. So what we've done in Creston is said, okay, you can invest $5,000 into the investment co-op. You're all members and owners of this. We're creating a revolving loan fund, and then we'll recirculate that money into local businesses. So we're raising it from local people, $5,000 each, up to $5,000, and placing it back into the Creston economy. So that's that 1 to 5% shift of investment portfolios. It's a $5,000 investment when you're talking to some of the target markets we're looking at. That's not a significant piece of their existing portfolios. In Creston, we became RRSP certified too, so you can transfer back existing RRSPs. So it's cost effective, it's democratic and locally owned and controlled. Every member has one vote, no matter how many membership or investment shares they have. Nobody can buy the votes like a regular corporation. And it's always going to be rooted in the community because you write that in your bylaws. This is where the investment co-op is. So unless you have, I think it's over 75% of the members have to agree on changing the bylaws. Unless you have that vote, it's rooted in the community. And the other piece between microlending and venture capital corporations and all of those other pieces, they call the co-op model, the business model around the world, the Swiss Army knife of business, because it can do so many things and it can fill so many needs. Socially, environmentally, democratically, but Financially, we can do lending, we can do equity investments, and we can be part owners, joint ventures. So we can loan to small businesses. If there's a tech company that pops up, we can say, hey, we'll give you some loans, but we also want 1 or 5% stake in your company so that if you go big, the community also benefits for supporting you. We can also do ownership or joint venture. So if the investment co-op wanted to go into joint venture with a regional district or a town to create clean energy production, the community could come in with money through the investment co-op and part own it with the town or regional district or CBT or something like that to create clean solar energy or run a river hydro or create our own energy systems here. So there's lots of different ways that you can use the money in your co-op differently than you can in a venture capital corporation or micro lending. So that's why we chose the co-op model in BC, and that's why more of them are popping up in BC. So to talk about the Creston investment model, it was an initiative led by us, and we did the feasibility study with those 20 stakeholders in the business planning sessions with that advisory group, launched with 107 members. I'll just read this for everybody in the back of the room. This is the mission statement of Creston. The investment co-op will contribute to a supportive, resilient, and diversified local economy by redirecting local capital into Creston and district businesses. Our residents will see the full social, environmental, and economic impacts of their investments growing at home. Businesses will have access to an additional source of capital, and community relationships, civic pride, and knowledge will naturally deepen as a result. So that's their mission statement. And I'm going to get into a little bit on what it actually looks like over there so you can get an idea of how these investment co-ops work. So it's member-owned and controlled, as you know. We've got that $5,000 limit in BC right now. We're trying to get that changed with the coalition, but for right now it's $5,000 lifetime investment you can invest into a co-op before filing those expensive documents. So we have a membership price of $500. We did a significantly higher membership fee to weed out some of the target population that we were trying to get. We were trying to look for people that could purchase a $500 membership that would also maximize that $5,000 investment too. We have a board that oversees the high level and investment committee that takes simple 2-page applications and looks at our lending philosophy, which is the next line. And if they like the 2-page application, they ask for the business plan, they do a little pitch session and coffee with the local entrepreneurs, get to know them, talk about their business plan, and do the due diligence and syndicating with other local lenders. And then there's a marketing committee that attends Rotary groups and does the marketing materials, runs a Facebook page, checks the Gmail account. So what we've done in Creston is created a governance structure with this investment co-op. We have 12 volunteers running this, and our organization is also providing in-kind services. But we've taken those 12 volunteer positions and broken it out into 12 roles and responsibilities, so that not one person is running this investment co-op. One person checks Gmail, one person does Facebook, so on and so forth. So that way we can really be targeted to when we're talking to a volunteer, we're saying we're recruiting you for this specific role in the investment co-op. There's 4 financing pillars. Their lending philosophy is a business has to, is it bedtime?
Yeah, we're going to go.
Oh, look at bedtime.
Everybody else's bedtime. So they have 4 lending pillars that they're doing. If a business applies, they have to show how they're either contributing to community economic development locally. They're not just creating a business to create a profit for themselves. They're providing a service to other businesses or residents locally, or clean energy or affordable housing or something like that. Social is how are they helping address a social issue in Creston and district with their business. How are they enhancing the environment or protecting the environment, whether it's changing out all the lights to LED, we need a $10,000, $20,000 loan, great, we can help you with that. And enhancing the local agri-food network. As you know, Creston's a huge hub for agriculture and food production. So those are their 4 broad categories. it leaves it open to a lot of people to apply, but it also allows them to say no to some businesses. So we have created the investment co-op to fit in the existing business continuum. So, as you know, there's community futures, there's credit unions, there's basic business advisors, all of these existing funds. Why create another one? We've made it so that when you fill out the 2-page application as an entrepreneur, you get connected to this local investment committee. They've got expertise, they've got experience, and they'll work with you and refer you to existing organizations locally and provincially and federally to get you to finance ready. So this is, you have a concept, you fill out the 2-page application, they ask you right off the bat, do you have a business plan? No, I don't. Okay, well, Community Futures helps with that. Kootenay Association for Business Development helps. Kootenay Aboriginal Business Development Association helps. There's a Women Enterprise Fund. There's a whole bunch of different existing programs that we don't have to do that as volunteers. We can just be the referral agency to get them to a business plan and finance ready. When they are, then we look at if we can do the loan ourselves. And we have a collaborative loan policy that we'll do 100% of the financing up to $50,000. Anything after that, $50,000 to $100,000, then we start going 75%, 50%, 25%. And that forces the investment co-op to go and seek syndicating on loans with other local lenders like Community Futures and credit unions, which we've done both, syndicating on loans with both of those, CBT Impact Investment Funds. So it helps spread the risk between financing organizations and having them help with the due diligence with these existing financial institutions who already have, which they've just done in Creston, saying, hey, the board has authority to do a loan from $10,000 to $100,000. If it's over that, we're getting everybody, 107 members, we're sending them an email and saying, we've got an investment over this amount, we want you to come in and vote on it. So everybody's got one vote. The investment committee pitches the due diligence, the syndication we're doing about the business, and everybody gets one vote to move forward or not. So it's a really democratic process. And we're lending at prime plus 3.5% in Creston, which is in line with local lenders. So it's about 6.5% right now. Well, actually 6.7, which is similar to business rate at Community Futures and credit union. What we say to our investors, those 107 people, is you're going to receive a 0 to 3% return on your investment. We're lending out at 6%. There's fees, there's reserve funds that we're topping up as we grow this organization. So if all of the money is invested, you're going to get a 3% return or more depending on how high the interest rates are. But if none of the money is getting invested, nobody's getting paid because we're all owners of this together. So the last bit is talking about this initiative, replicating Creston's investment co-op. There's a lot of laws that you have to navigate through, and we've spent 3 years navigating through that with myself and Tyrrell and lawyers and accountants and co-op developers around the province. So CRA, you have to do things, BC Co-op Act, you have to do things, securities laws. You have to do this a certain way, but there's a whole bunch of options as well. You can be RRSP certified or not. You can be regional, you can be local, you can do raise money from only individuals locally and place only locally, or you can import money from accredited investors across Canada into the Columbia Valley. You can have a $100 membership fee and a $5,000 membership fee. There's a whole bunch of different ways to do it. That's how Creston did it. So what I'm going to do after these presentations is we're going to determine which 2 communities are the most interested and committed to moving forward with an investment co-op. You're number 2 of 17 presentations. So after that, if there's more than 2 communities and regions that are really interested, we'll look at a bigger regional approach like a East Kootenay and West Kootenay investment co-op with sub-regional funds. So if the Columbia Valley is really interested, and so is Elk Valley and Kimberley, then we can look at how does this look on a regional approach, but still keeping our money locally and still having some control there. Because you don't want to replicate a whole bunch of these things and pay director insurance and accounting fees and whatnot for all of these micro-lending funds if there's that many communities interested. So we'll take a look at that, and that'll be at the end of February. We'll know what the size of these investment co-ops will look like. So then we'll convene a community advisory group in March and start the business planning sessions. I'll go through all of those questions that I asked Creston, the securities laws, RSP, all of that. We'll have 6 business planning sessions over March to June. And then we'll take that and work with the lawyers and the co-op developers to turn that into the legal subscription agreement, your bylaws and everything else, and work with a local project coordinator or 2. Come back in September and November and pitch it back to the community advisory group saying, here's your business plan from the conversations, here's what it looks like in legal documents. Go through it with a fine-tooth comb and bring the lawyer in from Vancouver, who's a lovely, lovely lady. She's always been in nonprofit co-ops, and that's her focus for legal. And then we'll prepare for a public launch in October, November. So that's the quick and dirty of what this year looks like. So February 9th is the last presentation, and then we'll assess from February 9th to 28th how many communities are interested, what does the size look like, start talking to some of those organizations and local coordinators that have put their names forward, and then get into business planning. The last bit, because I'm going to open it up to question and answers for the next 20 minutes. But there's a sheet on your table that looks like this, and we'll send a follow-up email if you don't get to look at this before you leave. This is the crucial step to determine if Columbia Valley is going to be included in this or not. Is not just the interest you show at tonight's event, but the commitment of people who are actually going to participate in the community advisory groups, the steering group that will help me with the business planning to say, what does it look like in the Columbia Valley or the East Kootenays? What organizations, so question 1, would you like to establish, you can put up your hand for this one, would you like to establish a community investment co-op in the region? 3 people. And on the sheets, there's 3 questions, 3 areas to fill in. Which individuals in this room will participate on an advisory group? That's 1 or 2 business planning sessions per month that I'll facilitate. You come and bring your expertise as a community stakeholder to say, we really want affordable housing, or we want clean energy production, or we just want it for tech, or we just want it for tourism, or we just want it for this, or all of the above. So we want a diverse group of people to sit on that steering group. Which organizations in this room, including the chamber, because they've already volunteered, and the guy with the camera, are committed to establishing a community investment co-op here. So we need some organizations like KDS and the Chamber and Economic Development Advisory Committee to be able to move this forward in its fledgling first few years until it creates an investment portfolio that can pay for a coordinator and whatnot. And then who in the room is interested to be a local project coordinator? Michelle stood up, so write his name down. That's somebody that I can chat with to plan venues, catering, connect with the advisory group, the general advisory group, so I'm not talking to 15 or 20 people in each community, just 1 or 2 people. So if you're interested in being that person, along with Ryan and myself here, then put your name down in the middle there. I think there's 2 spaces for a local project coordinator. I'm going to open it up for 15 minutes, 20 minutes of just question and answers, and I think we're kind of at 7, so we'll try to get you out of here, Stephanie, and up front.